Good morning. It's Friday, February 6th, 2026. 2026 or 2026 is what I meant to say. Good morning. I been glued to the markets, and just doing my other job responsibilities, life responsibilities. Last night, I went out to dinner, and when I left, Bitcoin was down around 60,000. Hadn't gone quite below it, but 60,200. Silver was at 65. The Qs were down, and I thought, wow, we're just this in this general deleveraging. And then by the time I got back from dinner and looked at the markets, Bitcoin had bounced to 64,000. Silver had bounced to 70. The Qs were starting to come back. Then in the morning here, everything was actually green pre-market and has continued that way. Bitcoin's now 68,000, and I mentioned in my last video report here that MicroStrategy, their average cost basis was like 76,000. Jim Bianco had a piece out that said that for all the ETFs and the people that access Bitcoin through those, the average price was like 86,000. So a lot of people are underwater, and there's been a general deleveraging there. Not it's not exclusive, obviously, to Bitcoin. It's but that seems to be the focal point. The crypto market seems to be the focal point for from a liquidity standpoint right now. You're seeing, at one point last night I looked, Microsoft was below 3 trillion in market capitalization, so it had been right up there with Nvidia and Apple above 4 trillion as the market's largest stock. So it's lost $1 trillion in market cap here, kind of quietly, and it's pretty remarkable, that you see that, and that money is the equal weight S&P 500 index has actually been outperforming, and we see it in a lot of our stocks. There's been general outperformance this year, albeit with a lot of volatility. And it reminds me of 2000 in some ways, because when you started to get that in 2000, where small caps were outperforming, small cap value was outperforming, commodities were outperforming. But then when you would get the whooshes down in the market, eventually the sell-off would correlate more to one. And so, we're seeing the same thing when you see these general deleveragings. And I wanted to talk about today, I just wanted to give an update, but Anu in our crypto room the other night, he said he's been in South America and vacationing, but he said, man, we can get into the 50s. We almost got there last night, but he thought we'd see a counter trend bounce, which we're seeing. He thought ultimately we could go down as low as 52,000 in Bitcoin, and maybe even lower than that. Tellingly, he often will put what he calls as think bids in. He didn't have anything in there right now, so I think that says something. So I want to mention that. Then another guy, a friend of mine that trades futures, he's a metals trader, a commodities trader. He actually thinks that we're going to go back to the breakout point in silver of 55, and then silver got to 65 last night. Then we bounced pretty aggressively. You have the Chinese markets going to kind of shut down here for their holiday. So it's going to be interesting how price action is in February, particularly in gold and silver. But again, they're almost everything is basically moving together right now when you look at the market. So the crypto's moving together, the metals are moving together, the stocks are moving together, and I've been following SanDisk, pretty closely because it's one that I've owned in the past. It kind of sold off last Friday when you had silver that pushed down, and people were getting rid of their call options in SLV. They also did the same thing in SanDisk, so you had this big reversal day. SanDisk is actually a little bit higher in the week, almost a flat week, kind of like what silver's done, really. So I'm watching that. I'm seeing if Microsoft will bounce at all, given the sell-off. And obviously, we're looking at some of the undervalued payment processors. Microsoft is above 400, it's just 396, so it's coming back in today. And obviously, on a on a, you know, in October of last year it was 540, 541. So that gives you a perspective of how much it's come down. But yeah, SanDisk right now is looking flat for the week. Um, so, again, I'm looking, it's still up, year to date, SanDisk is still up 137%, which is remarkable. The memory stocks have just surged. So SanDisk, Micron, Seagate, Western Digital, which had bought SanDisk and then spun it out. But I'm watching those pretty closely, but I do think Bitcoin is the key here. So if it reverses lower again, I think that's going to spark what has been just a general deleveraging in the market. So kind of keep an eye on that. Look at it as a marker. Again, we're getting outperformance this year, and a couple guys mentioned me today. Peabody's up 7% today. Peabody's up 23.8% year to date. A lot of the precious metal miners have had pretty good years despite the volatility here. So it's been what I have been calling. I think since 2020 we've been in the golden age of active investing. And I wrote a piece on Seeking Alpha where when Exxon was taken out of the Dow and replaced by Salesforce.com, and I've updated it over the years, but the returns are staggering. I mean, Exxon's up, somewhere around 350%, where Salesforce is down like 30%. Those are just rough numbers since you know uh, Salesforce replaced Exxon in the Dow, and that was all the way back, in August of, I believe, 2020. Um, so you know, quietly emerging out of the pandemic there, growth really bounced back, but it was a stock pickers environment. And then we had the 2021 top where the flood of SPACs came in. The S&P was actually down 22% at one point in October of 2022. Then OpenAI came out with ChatGPT November 22. Jensen Huang and NVIDIA said in May of 23 there's going to be a whole new bull market, and I was like, how could this be? How could they reinflate the bubble? They did. We have what I call was an echo bubble, and it was more concentrated in the largest, the Mag 7, the largest really 15 or 20 stocks, largest 100 stocks even, but, it was top heavy, similar to the Nifty 50 in the late 60s and early 1970s. Looks like now that we made the peak there in October of 2025, a lot of the meme stocks and the hyper growth stocks, things like Okla, Okla was at 1.190, in October of 2025. It was in the 60s the other day when I looked at it. So you've seen the momentum stocks have been hammered, and there was a few holdouts, like Carvana was a momentum holdout, obviously with the Gotham short report. That one started to get hammered here, and now you're seeing broad sell-offs in the broader market, and Microsoft was down 18% year to date when I looked at it last night. And you're seeing, we're trying to find opportunity. PayPal's down over 30% year to date. I was looking at PayPal more in depth the other day. I have some regret because I bought PayPal in the FAMDC portfolio, and Kay, hopeful guy, has kind of convinced me on a GPN. But I was circling back with PayPal, and it just 36 billion market cap, 6 billion in free cash flow. It's like a 17% free cash flow yield, roughly. They got the ability. They've been buying back stock. They're going to continue to do that. The PEs, in the 7 range here. So there's definitely going to be opportunity. And the bears would say it's a melting ice cube, but they still have revenue growth right now. So it's not like they're just shrinking entirely. But there's, in this general deleveraging where people are just scaling back their exposure, the laggards are getting hit pretty hard. So there's going to be opportunity there. That's in the software stocks. I saw Jensen Huang said that the sell-off in the software stocks, doesn't reconcile with what he believes will play out. But it's nerve-wracking to see that type of volatility. And again, it's notable because there is a general deleveraging. But then, like today, when there's a recovery, a reliquefaction, everything kind of goes up together. So it's an interesting market, one that you have to keep an even keel in, take advantage of that volatility. If you do a trade and you're offsides on it, oftentimes you'll be able to recover just because the volatility is so high. But you have to keep your emotions to the side and try to see the bigger picture. So hopefully you guys have a good weekend. We got snow here again. We've had just a brutal stretch of winter. It's like sleet and snowing today. I went out. I took some pictures. It was pretty because there was heavy snow coming down. But um, it's been a winter. I saw Lake Erie was 96% frozen. And it could become 100% frozen in the next few days. And the last time that's happened, it's been like 30 years ago or something like that. So the cold in the Midwest, Northeast has been pretty brutal. I saw Cuba the other day. Somewhere in Cuba got down to freezing. That's the first time they've had a recorded temperature of 32 degrees Fahrenheit in Cuba. So winter has been at least a normal winter, maybe more. And with natural gas, I'll close on that. We're 7%, I think, below the 5-year average today. As I'm speaking. So there's going to be price support there. I know that there's still these weather oscillations that are pretty wild, and also with natural gas production hasn't bounced back as much as people had thought it would. So these next once we get out of these weather impacted storage reports, it'll be interesting how much production bounces back. But I still think the backdrop is very favorable there. And again, there's a lot of volatility though. So enjoy the weekend. Hopefully you guys enjoy the Super Bowl, have a good weekend, and are taking advantage of volatility in the markets. Take care.